Billions and soon trillions in value will be created in the autonomy economy. By the time a trend becomes consensus, the alpha is already gone. The gap between uncovering signals and reading headlines is widening fast. When it's a headline, it's no longer a signal. Enter Autonomy AI. We decode signals before they move markets, giving you the edge while everyone else tries to decipher the autonomy economy. Autonomy AI. Your models, our intelligence. Visit AUTNMY.ai.
Rob, well, I was busy this week doing fieldwork for our clients in the Permian Basin. The Autonomy kept chugging along. Autonomy took to the skies, not planes, but helicopters. Caterpillar made an interesting move, and we had an autonomous trucking SPAC that unfortunately didn't go too well. But overall, it was another healthy week full of signals. So let's break down those signals for this week. One, the first signal is global flight milestone for autonomous military cargo helicopters. Two, agricultural sale to benefit construction equipment tech. And PlusAI SPAC termination. Three different signals to uncover. Let's start with autonomous helicopters. Really cool signal there. What did Omega uncover and what did we learn?
Well, great to see you as always, Grayson, and I'm glad your trip went well. Permian Basin is a very unique place in the United States in terms of both what goes on down there and its beauty. So what Omega uncovered this week is an interesting signal that I think is a corollary to things that we've talked about in the past. And what I mean is that what it's uncovered is some great progress by Airbus on its work for an autonomous helicopter it's developing for the U.S. Marine Corps. But what Omega is telling us is don't read too much into this particular advancement, even though Airbus and its partners should be applauded for it. It might not be the real signal that commercial autonomous helicopters are advancing at the same pace. And so what I mean is Airbus is making great progress in the development of this autonomous cargo helicopter. And I'll get into a little bit more of the details on that in a second. But what Omega is, to repeat, saying is this doesn't necessarily mean a one-for-one relation in the developments towards commercialization and commercial use of that autonomous system in cargo helicopters for, say, DHL or FedEx. So this week, Airbus conducted its fourth flight test of the autonomous helicopter it's developing for the U.S. Marine Corps. And what it calls its MQ-72C. It's a very military term. Basically, it's a utility helicopter that is modified for autonomous missions. It's purpose-built logistics helicopter, and it's underneath a Naval Air Systems Command middle tier acquisition rapid prototyping contract. And that'll be important as to why this signal is not to be overread in terms of its commercial applications. So the nitty gritty is Airbus is partnered with L3Harris for systems integration, Perry Labs for ground control and edge computing, and Shield AI for its HiveMind autonomy software. And this three-partner consortium tested its first kind of integrated flight in Grand Prairie, Texas this week. And by all accounts, that went very well. And so that is to be applauded, and Airbus is to be applauded for its success in that realm. Now, what some in the press are reporting, particularly those who follow defense and those that try to read into what do these advances in defense technology mean for potential commercialization of that technology, they're treating this development as very promising for a yield to potential dual-use platform for both military and commercial logistics. I think, and Omega thinks, given the way that this rapid prototyping program is developed and authorized, structured, funded, and legally constrained, that this is not the development of a military product as a commercial product in disguise. This is really a U.S. sovereign military capability developed under a very specific statutory authority that explicitly will limit the technology transfer, limits the foreign military sales eligibility and the commercial derivative applications. And so that's what's the really interesting thing here is, unlike last week where we talked about Ukraine and its Brave One program and its development of autonomous drones and autonomous unmanned ground systems as a way to transfer into potential commercial use for the reconstruction and rebuilding of that society. Here, while we do have an advancement by Airbus that is to be, again, applauded, it's not necessarily the same signal that commercial dual use is right around the corner.
The interesting signal to me in this is that it's very clear that the Department of War, Department of Defense is investing in automation and autonomy. We saw the budget that came out. So that's a really good signal there. This just reinforces that signal. Interesting thing to relate to the consumer side is that in order for Airbus to do this, they had to convert traditional manual controls to a fly-by-wire. Very similar, in order to make an autonomous vehicle drive, you have to have a drive-by-wire. So that signal's there. But as it relates to the dual use, I think you're 100% correct. I do not see in the immediate future, one, where the FAA will allow autonomous flight with a human passenger. And two, I just don't think that the consumer trust is there. But on the military side, yes, I think what we're seeing now in the Iran war with the drones, I think putting an autonomous helicopter to rescue a downed pilot or to rescue a soldier is a very good use case that could become a very successful use case. And staying with the goals of the Trump administration, if completed successfully and go to manufacturing, these helicopters are scheduled to come off the line in 2029 in Mississippi. So manufacturing happening in America. So there's a lot of good signals here, not necessarily the overlap from, say, military to civilian, but a lot of really good signals for where the autonomous defense market is going and evolving.
100%, right? I mean, you look at just this week with the Department of Autonomous Weapons Group, DOG, that was announced in terms of the funding that is in the Pentagon's budget for the development of autonomous systems. You saw the Southern Command release a press release, in fact, about its directing the establishment of an autonomous warfare command to support national security priorities in the Southern Hemisphere. And, talking about this is a direct quote from the U.S. Marine General Francis Donovan, their commander of Southcom. From the seafloor to space and across the cyber domain, we fully intend to leverage the clear superiority of the American defense ecosystem by deploying cutting-edge innovation and working ever closer with autonomous partners in the region to outmatch those who threaten our collective peace and security. And so what you're really seeing is a doubling down of the future of autonomous warfare. Now, when it comes to helicopters, Airbus has the inside track, by the way, in terms of development of these cargo autonomous helicopters. And so they already have a contract that's been in place for, I think, since 2006, so almost 20 years now, to develop, and they've delivered almost 600 of these cargo multi-utility helicopters that are used for kind of ship-to-shore missions to bring in additional materials for soldiers on the ground, and they have to navigate really unique circumstances in terms of, what are the areas that they're landing in, what are the obstacles that are down there, everything from rocks to uneven ground to GPS denied services. And so, the development of the autonomous system here in a military context by Airbus for a helicopter that is a derivative of a helicopter they already provide to the military, I think really speaks highly of Airbus's ability to continue to build a moat in this area for itself in terms of the military applications for autonomous warfare. But again, I think this is somewhat limited in terms of its civilian use for many reasons, both legal and in terms of the specific contract and the way it came up for this particular prototype.
On the civilian side, you're right about that. On the military side, the United States Marine Corps wants to use it, not necessarily at first for getting down soldiers in harm's way, but supplies and bringing supplies into a hostile environment with military fire. That's a really great application for that. As Airbus continues to invest in this technology, deploy it with the United States Marine Corps, we can't forget about Sikorsky. They've been working on this technology for autonomous helicopters for a while. They actually, in the Stratford, Connecticut plant, actually, is where they've been doing this. And it seems to me that we are now getting the signals from Omega that perhaps we are in the early phases of seeing autonomous helicopters deployed in warfare. Am I reading those signals correctly?
I think you are. I think ultimately what Airbus is trying to do is show that not only can they produce a system in coordination with others, right? We've already talked about how Shield AI is providing some of the autonomy stack here, but also that it can then be used in these really specific scenarios for the government. And so, again, they're not trying to solve autonomy for every helicopter. They're trying to, in military conflicts, they're trying to solve a very specific use case here, where it is delivery of cargo to troops already on the ground in hostile environments, often called ship to shore, because generally what you use these helicopters for is to take materials from a naval ship, right, to the Navy seamen on the ground and the Marines on the ground. And what is really interesting here is that the technology is really advancing in terms of its obstacle avoidance algorithms currently for like things like small rock detection type, and seeing different abilities to certify the technology for military uses, right? In terms of getting the right certifications, earning that trust, being able to show that it can deliver goods in a way that is perhaps better and safer than a human can, to replace manned helicopter logistics sorties in contested environments, and shore-to-shore resupply and ship-to-shore resupply without exposing aircrew to anti-access and area denial threats would be a pretty big accomplishment. And I think we continue to see the progress on the military side and the need for unmanned systems. And I think really what Omega is telling us week after week is watch this space. Watch the development of autonomous warfare technology, whether you're invested in it, whether you're thinking about investing in it, whether you're just a member of the general public who's interested in autonomy like us. Some of the greatest advances we're seeing are happening on the military side, and they're happening for out of necessity in many senses, as that quote from the Southcom commander just said. It is the future of warfare.
It is the future of warfare, and there's a lot of advantages with this technology. There's great advantages, and the greatest advantage, underlying bold exclamation point, is the saving of human lives, of taking men and women of the armed forces out of harm's way. That is hands down the greatest advantage of this technology that's being developed with civilians in conjunction with the United States Department of War. And let's dive into the risks here, because Omega's uncovered quite a few risks. While there's advantages, there's still risk, and we always have to point out the risks. And I want to start with this risk that Omega has highlighted here: obstacle avoidance technical gap. The fourth test, which you highlighted, the fourth flight test identified persistent challenges in detecting small rocks and debris in low altitude flight profiles. If this technical gap requires fundamental changes to the sensor suite, e.g. replacement of the current LiDAR radar configuration with a more capable but heavier system, the platform's reduced payload capacity, currently targeting approximately 1,500 kilograms, could be reduced, diminishing the platform's commercial value proposition for cargo operations. That's interesting, because we think about ground vehicles for cars. We don't necessarily think about weight. Trucks, obviously, we do. But here, when you're in the sky, weight's a lot more important here. That's a really good risk that Omega's pointed out there.
100%. And it really goes to show its understanding of the scenarios and the pros and cons of going to unmanned systems in air supply logistics. So it's not only the overall weight of the helicopter in this instance that matters, but also its payload capacity, right? So there has to be a point at which the helicopter gets either so heavy that it can no longer carry the same amount of weight, that it becomes unworkable in the sense that a manned helicopter can carry a lot more supplies. Even though you put that person at risk, ultimately the mission in this sense for these helicopters is a supply logistics mission. And so if the technical gap here proves unworkable or requires a heavier weight to the helicopter and less payload capacity, then the kind of raison d'etre, so to speak, to move to an autonomous helicopter in this instance may be lost. And so I think it is a really important risk that Omega is highlighting here, but it also goes to show its understanding of what needs to happen for a transition to autonomous helicopters for cargo and logistics supply to be cost effective, to be mission effective.
I would say this: Omega highlighted it, you reinforced it, and to the audience, pay attention to the sensor suites. The technology matters, the energy matters, but when you're getting into autonomous aircraft, the weight matters, and the weight makes a really big difference. And not to go a little bit off topic, but I will share something with you and for the audience. On my flight to the Permian Basin from Denver, we were overweight. They had to remove some bags from that on that commercial flight. So weight does matter for flying. Let's move on to the next risk here, because this one has the potential to happen. It has not occurred, but I want to highlight it does have the potential depending on funding. But Omega did a really good job of uncovering this. Competing United States Marine Corps autonomous logistics programs. The United States Marine Corps is simultaneously evaluating multiple autonomous logistics concepts, including fixed-wing UAS, that stands for unmanned platforms, from Shield AI, Joby Aviation, and Archer Aviation. If any of these competing programs demonstrate superior cost per ton economics or faster certification timelines, certification is very important, the United States Marine Corps could redirect ALC funding away from the MQ-72C, reducing the program's total value and eliminating the commercial derivative of that opportunity. That could be a risk to Airbus. And while Joby and Archer do not have the funding that Airbus does, that is a very real risk there. And Omega, in my opinion, did a good job uncovering it. What do you think of that potential risk?
I think it's spot on, this risk. I also think it's a testament to the continuing depth of the ecosystem and the development of autonomous systems that we're here talking about 3, 4, 5 potentially legitimate contenders for the development of unmanned aerial platforms for military purposes. I think competition is something that drives innovation. It's something that drives efficiency. It's something that drives overall value for the military. And so I agree that the competition is real here, but I also see it as a really healthy sign that this particular area of autonomy in defense systems, but particularly autonomy for helicopters and autonomy for aerial platforms, whether for kinetic use or non-kinetic use, such as cargo resupply, is continuing to develop. And I think that is only a really good thing for the autonomy ecosystem writ large. I think proving out use case after use case, proving that these systems work under pressure, that they can be built at scale, that they can be certified, that they can be understood, that they can be deployed. It's all very big positive for autonomy, whether in defense or for civilian purposes. And so I think competition is super healthy in this space. I think some of the names that you mentioned are doing great things. We visited some of their headquarters over times and know some of the folks that work there. And they've got really intelligent, really smart engineers and other folks that are developing systems that do need our best to be working on in order to provide the best for hopefully and continuing going forward the world's best military.
The world's best military, and competition breeds a better product. And for the audience, I will tease, Rob and I are doing a field trip. We're doing field work, and we're visiting an autonomous air company, and we are recording a podcast. So stay tuned for that. We're not going to tell you it's going to be on the air. It's going to be on the ground. You're going to have to stay tuned for that one there. But Rob and I are doing that. We're going to release that in the early summer. So we're going to continue to cover this both here on Autonomy Signals and also on the road to autonomy. Perhaps, knowing Rob and I, perhaps there's something else special coming down the pipe. So stay tuned for that. Which brings us on to Omega's take. Let's get Omega's take on all of this. Omega assesses with high conviction that the MQ-72C, which is Airbus, will not achieve commercial deployment before 2028. The market is potentially conflating the 2028 military initial operations capability target with commercial market entry, a category error that overstates near-term commercial opportunity by 2 to 3 years and ignores ITAR, FAA certification, and program architecture constraints that structurally preclude civilian deployment on this timeline. You said it earlier, sir. You were right about the civilian aspect, and Omega's reinforcing that here with her take. That was that take. You were right. I'll toot your horn. You were right. Let's move on to the next Omega take here. The primary catalyst that will confirm this thesis is Phase 2 Other Transaction Authority contract award for the NAVAIR, which is the U.S. Navy, in Q3, Q4 2026, which will be framed exclusively as a military procurement event with no commercial deployment language, validating, I love this, Omega's compliment herself here, Omega's assessment the program remains sovereign military property with no civilian off-ramp before 2029 at the earliest. The risk reward for any position premised on a pre-2028 commercial deployment is asymmetry negative. The upside requires the simultaneous alignment of FAA rulemaking, ITAR licensing, commercial operator capital commitment, and program acceleration that Omega assesses as a 5% probability scenario, while the downside program delay to 2029, 2030 is a 75% probability base case. I think that sums it up there.
Yeah, I think Omega's pretty clear. It gives very little chance, 5% chance that we'll see a commercial development or deployment out of this advancement by 2028. Rather, it sees, and maybe it too gets frustrated with the government, it sees delay as more likely than anything. But you know, we'll try to ask Omega where its frustration with the advancement of the U.S. government's ability to get things done comes from.
We'll see. Each and every day, Omega's getting smarter as it retrains every day, which brings us to signal number 2. Caterpillar acquired the IP of autonomous/electric farm ag tractor startup Monarch this week. What do we know about this transaction? What are the signals that we're seeing with it?
So, I mean, I think what we're seeing here is not an ag story, which this is seemingly immediately jumps out to you as, but rather a construction story and a software stack learning story instead. So what happened here is Caterpillar acquired Monarch Tractor, which was a California-based startup specializing in electric, autonomous, and driver optional farm tractors. Interesting side fact, the company was launched by Carlo Mondavi, who is a 4th-generation wine grower, and folks might know the Mondavi name from being in the grocery store. But Monarch, over its 7 years, kind of struggled to scale and commercialize its technology. And it had some legal issues as well, and some really awful things were said about its technology in terms of, was it truly autonomous? Did it work? Folks who had engaged with them were very, very upset when they said it didn't work. But Caterpillar has acquired the intellectual property and core assets of Monarch. And now folks may be thinking, oh, Caterpillar might be going into agricultural automation. But that's not the read here. The read here is that Caterpillar is making this acquisition so it can acquire Monarch's software suite, corpus of learning data, particularly learning data from interaction in unstructured environments. Again, this is a constant theme, right? Unstructured environments, GPS denied areas, so they can better learn and speed up the learnings, accelerate the learnings of what Caterpillar is doing with some of its construction automation systems. And so I think that's what this really is. This is Caterpillar harvesting the data for construction advancement for its CAT Command and CAT MineStar compact autonomous track loaders, mini excavators, small dozers, things like that. And so I really think this is a very smart move by Caterpillar.
It's a smart move by Caterpillar. It was to clarify that for the audience, it was an IP transfer, not an acquisition of the company. They acquired the IP, which I'll get to in a minute, because you talked about the data, and one of the, if you want to say, the important data sets inside a Monarch tractor was the vision-based optical detection for unstructured outdoor environments. And why do I highlight that? Because last week, Rob and I spoke about Amazon's acquisition of the physical AI companies because they were getting their data. And getting this unstructured data is very important as you scale. And Caterpillar is a healthy company. You can go look on the SEC. You can look at their filings. The company is growing. As Rob said, they're no longer in the agriculture business, but they have a booming generator business. And you say, oh, why generators? Well, their generators are being used at data centers, and we can all open the news every day and see what the data center business is doing. And they also have a very big, growing mining business, construction business. And so using this data to get it autonomous as CAT MineStar. And for the audience that doesn't know, Caterpillar has the largest deployment of autonomous vehicles of any company in the world. Oh, you say Waymo this or this company this. No, it's actually Caterpillar. And a lot of those are in Western Australia, west of Perth, and running in the mine. So Caterpillar has been doing this program, I believe it's over 20 years. For the audience, you fact check me on that. But Caterpillar is continuing to invest in autonomy. And some of the really interesting IP that Caterpillar acquired as part of this transaction was the vehicle control by a remote operator, which ties directly into their CatStar operations. CatStar are semi-autonomous. They are still controlled by a human, very similar to what we're seeing with Teleo. Then they also got the vehicle follow and safety IP patent. They got the plant and or vehicle locating. They got obstruction avoidance, vehicle row follow system, battery swap system. That's interesting. Potentially, this is a potential that Caterpillar could be looking into electrification there. A vehicle rollover mitigation, very important on a construction site. Vehicle lead control. So, Rob, Caterpillar is getting a patent portfolio for protection, which you need, and they're getting unstructured data. It seems to me that, I'll just kind of say it because Omega pointed out last week, Amazon set a trend here where companies are looking at acquiring companies, no matter what state they're in, to get the unstructured data to help move their autonomy programs forward. Perhaps that's the new acquisition target. Could I be thinking about that the right way?
I think you're thinking about it exactly the right way, right? I mean, what we're seeing is the beginning of a trend, I believe, and Omega is certainly picking it up as well, where the competitive moat in these markets is not necessarily hardware, right? But perception stack performance, labeled data sets, things of that nature that take the software layer and build upon it and transfer those learnings into the autonomous system that in the first case Amazon's building, and here Caterpillar is building. And so what you're seeing is this sense that these parts of the software stack, right? The perception stack, the label training data sets, specific software-defined vehicle architecture, things like that. You're going after them to accelerate what you're doing on your end. And so I think what we're also seeing is the research in terms of this technology transfer logic, right? From, in this instance, agriculture to construction autonomy is very direct from what the research on Archive and other sites suggest, including papers from Stanford's AI Lab and Carnegie Mellon Robotics Institute that look at things like terrain classification and dynamic object tracking. That research suggests or confirms that the core perception algorithms developed for agricultural autonomy, like where the operating environment is similarly unstructured, GPS denied in some areas, and populated with unpredictable human workers, transfer into construction site environments. And so, the primary adaptation required is recalibrating the object classification models for construction-specific obstacles, rather than agricultural obstacles, represents maybe months of engineering work as opposed to years of work to get all that data to begin with. And so that's what we mean. It really is that software stack where if you go out and you purchase that or you acquire it or you acquire the IP to it, however you do it, can be a real accelerant, even if you're not getting it directly from something that seems one-to-one in terms of the industry you're in, right? Amazon went out and bought a little social robot and bought a delivery robot. And here we have Caterpillar buying ag data sets and perception stacks and software layer.
It's data. And I want to give some numbers for the audience here on the data to put what you're describing into numbers here. Monarch Tractor had 8 years of real field work data. That's real deployments, real data, not simulated. And I said this before on the previous podcast, and I'm going to say this again until I'm blue in the face. Not all data is created equal. I'll say it again. Not all data is created equal. And 8 years of real field data is extremely valuable. Furthermore, Monarch's MKV tractor accumulated labeled imagery across approximately 40,000 acres of specialty crop terrain in California, Washington State, and select European regions, generating an estimated 2 to 4 million labeled frames and customing low clearance, obstacle detection, organic terrain viability, and multi-object tracking in cluttered visual environments. That is massively valuable data. Is Caterpillar, I'll use the Honey, I Shrunk the Kids, because we watched that the other night with the kids. They shrink the Caterpillar vehicles and they go into smaller things. That data becomes very valuable there and potentially become an accelerant. So let's go further into this, because what we're seeing in mining, we're seeing a consolidation in mining around autonomy led from OEMs. This data that Caterpillar has acquired and that they are potentially, we got to say potential because we do not have any public statements from Caterpillar on this, could accelerate their mining operations. And you might think of mining of just in Western Australia, Western parts of the United States. I was in the Permian this week. They are mining for sand. And you say, oh, mining. No, they're dredging for sand. Do you know what I saw there? Caterpillar. I saw Caterpillar equipment in the Permian Basin being used. This data set could potentially unstructure that. So to me, all signs point to a savvy acquisition for Caterpillar based on this data set and what they're getting.
I do too, right? This is, again, I think the beginning of a trend. I think folks are looking to augment and accelerate their learnings, and what we're seeing from the research papers and from what we're seeing in the real world, the ability to transfer these learnings from similar yet distinct environments is very real.
It's very real. While we highlighted what we think potentially the positives are for this, Omega is balanced. We also have to go into the risks, and the risks here are as follows. We're going to start with this risk. This one is a very important one to watch. Caterpillar warehouses the Monarch IP. Caterpillar warehouses the Monarch IP integrating into internal R&D processes without ever deploying it in a commercial product, a technology vault scenario that generates zero revenue in 0 rating. Why could this happen? This is what Omega came up with. This scenario is plausible if Caterpillar's internal engineering teams determine that Monarch perception stack requires more fundamental re-architecturing than initially assessed, a risk that non-trivial given Monarch's documented failures in hydraulics, navigation, and overall dependability. If the labeled data set is domain-specific to agricultural environments in ways that do not transfer cleanly to construction sites, very important there, the retraining cost and timeline could push this integration timeline beyond 36 months, reducing the competitive advantage of the acquisition, potentially allowing Deere or Komatsu to establish an autonomous compact equipment standard first. You and I spoke about, if you want to, honey, I shrunk the equipment, and Omega saying, okay, if this data is not as good as it looks like on paper, and if the engineers aren't able to integrate it, along comes Deere, which has a big lab out there in the middle of the country, and then along comes Komatsu. So we're going to have to watch this here. What do you think?
Look, I've seen from experience in my time at Aurora and my time at Cruise that combining architecture, particularly software stacks, can be a very difficult process at times. It can you can do all the diligence up front, but until you actually have your lead engineers working with the data sets, working with the perception systems, working with the command units, it's so on and so speak, really getting into the nitty gritty, it is very hard to know how much work needs to be done to actually combine two systems. And so I think for the price that Caterpillar paid for the IP, given that the research suggests that this should go relatively smoothly, I think this is still a wise investment. But until you get under the hood, so to speak, and really start to figure out how two different perception stacks, two different data sets, two different architectures work together, or if they don't work together, you just don't know. And so I think this risk, it's inherent whenever you combine software layers, particularly in autonomy. And I've seen it through acquisitions that Cruise made and that Aurora made. Sometimes it goes well. Sometimes, it's a little one step backwards, two step forwards, which is still a success, but it's not immediate. Other times, it's like a NOS to a car from Fast and Furious. It just sends you on your way faster than you expect. But you don't know what you don't know until you really do the hard work.
You have to do the due diligence, and that Omega does the due diligence for us for doing this show for Autonomy Signals. That's the technical side. Okay, that's one aspect of the pie. I feel like we're playing a game of ping pong today here, Rob. We're going back and forth on both sides. That's a technical risk. The other risk that Omega uncovered, economics, the economy. The next risk is construction cycle normalization. The St. Louis Federal Reserve data shows that U.S. construction put in place growth accelerating from 8% in 2024 towards a 3 to 4% in 2026, driven by higher interest rates compressing private construction activity, a sharper than expected construction slowdown triggered by a Fed policy error. I'm going to put in parentheses in quote, ask the president about that, in quote, or credit marketing tightening would reduce Caterpillar's compact equipment unit volumes, shrinking the installed base into which autonomous software features would be deployed and reducing the potential revenue for the Monarch integration. This is insightful economic data and a very important risk to highlight outside of the technical risk.
Absolutely. And, we're seeing quite the fluctuations in various markets, construction markets, housing markets, the economy generally, as everyone tries to digest world events from Iran to what the Fed is going to do with interest rates to unemployment rates and so forth. We've got housing at its all-time most expensive. Are new construction starts going to go up? Are they going to go down? Look, this is a really big risk for Omega to be calling out. I think it's very precise in terms of understanding that what we're talking about when we come to the autonomy economy does involve the economy. And so, here we're going to have to see if they continue to build, if building starts, like I said, home construction starts, all sorts of things that could go wrong in this area are going to have downstream effects for the use of automation, for the acceleration of an introduction of automation into construction and other things. So we will follow this as somebody that you've asked, that you're listening to understand the signals that are coming, to give a heads up, to preview what we think might be coming. And we're going to take that responsibility to heart, and we're going to be on this like white on rice, as they say.
I like that. I'm going to make some rice this weekend now that you said that. So yeah, yes, we will be on that. And here's the third leg of the stool for risk, and the final risk. And this one ties it all together here. Internal organizational resistance. You and I have seen it in our careers. We've seen it documented in the press. We can't highlight this. We can't continue this without highlighting this. And Omega is right on this. Caterpillar's engineering culture, built around hardware reliability and manufacturing excellence, has historically been resistant to a software-first product development approaches. The integration of Monarch software team, a Silicon Valley startup culture, into Caterpillar's Peoria, Illinois engineering organization creates cultural and organizational friction that could slow integration timelines. That's good. I'm just saying this. It could potentially be two different cultures, and you could have a turf war here. And Omega's right.
Omega is right. And like you said, we've both seen it. We've seen it from the inside of organizations. We've seen it from the outside, right? I was at one of the organizations where we had a Detroit-based company, General Motors, and Cruise integrated. I think we did a pretty good job overall, but that wasn't always smooth. I think you have very different mindsets. You have very different, just the sheer size of these organizations can be a culture shock from the Silicon Valley end, but also then the kind of independence, whether and trust, whether earned or not, that Silicon Valley sometimes gives itself before somebody like a General Motors or Caterpillar is ready to give it away, right? That has to be earned. It's not move fast and break things in these places. And so that culture clash is real. It's not insurmountable, but it's people driven, and people are difficult at times. People are great at times. And so we'll have to see how this one plays out. But I think anytime you see this combination of Silicon Valley and old school manufacturer, and I don't mean that in a derogatory way, I just mean they're established, they've been around a long while, it raises questions. But as we talked about in our first signal, it can work really well. It seems like what's going on with Airbus and its work with Shield AI, that seems to be going very smoothly, and they're progressing well. So it doesn't necessarily mean it's going to be bad. It just means that it has a risk of inserting conflict and delay into the process.
It does, and we have to watch. There's been corporate acquisitions across the board. There's been corporate mergers over time, and some have worked out extremely successfully well. Some have not worked out well, and others have kind of, I'll just say, continued the status norm. I'm not making a prediction for where this one goes, and all I'll say is, as you clearly articulated, we'll watch to see where it goes and hope and root for the best outcome. Which brings us to Omega's take. Omega has some really great takes on this deal. Omega assesses high conviction long on the Caterpillar technology harvesting thesis, with the Monarch acquisition representing a $15 to $40 million purchase of a $350 to $500 million replacement cost software and perception stack that the market has entirely failed to value. If those numbers are accurate, that is very, very interesting if that holds.
And I think that's why this is such a smart move. This is a kind of low cost acquisition for somebody with Caterpillar's bank sheet that could pay off really large dividends, as it could accelerate its development of its autonomy stack for its construction and mining side of things that really are where they're looking to make bigger returns from automation. And so anything that comes at a low cost with a high rate of potential return and accelerates that return as well, I think is a worthy investment.
Which brings us to Omega's final take on this. Omega's cross-source analysis, building on the prior section's finding that Caterpillar Autonomy Division is scaling for industrial integration, concludes that Monarch's labeled specialty crop imagery, encompassing vineyard road detection, orchard canopy segmentation, low clearance, obstacle avoidance, and unstructured terrain navigation, functions as a transfer learning accelerant for CAT Command's industrial perception stack, compressing the model training timeline for edge case obstacle detection by an estimated 18 to 30 months. Where we are in the autonomy economy and how fast it's accelerating, if you can compress development and accelerate by 18 to 30 months, that if Omega's right on the price, that is a massive, massive accelerant to the upside for Caterpillar in terms of their technological autonomy development.
100%. And now you can see why Omega picked this signal out for us this week. I think it signals not only potentially really good positive returns for Caterpillar, but also signals in combination with what we talked about last week with Amazon and its purchase of Fauna Robotics and RIVR last week, that we're seeing a trend that acceleration is where people's minds are at. And I think they're seeing that as an opportunity, and that I think we're going to continue to see more of these type of deals as people look to increase the rate of return from automation with the ability to capture these accelerating data stacks and labeled data sets and perception advances.
The best part about this show that we're doing with signals is that even though each week Omega's uncovering different signals, there's trend patterns that are starting to emerge. We have the data patterns to emerge. We have the dual use. We have the geopolitical. There's a lot of uses, and the signals are all different. And we did get a deal signal this week, which is our third and final signal for the week. PlusAI and Churchill 9 mutually agreed to not go forward and combine, so the SPAC is dead. What do we know about that? Well, we got a press release, very minimal details, but Omega did what Omega always does, uncovers an analysis. What did we learn from the termination of the SPAC merger this week? What were the signals?
The signals this week are Omega is reading this kind of walk away from the SPAC, the devolution of this SPAC moving forward, not as a kind of urgent capitalization problem of a distressed company, but rather as a deliberate financing path substitution. And what Omega is using to support that signal is that back in January of this year, Trayton Group committed $25 million in non-dilutive R&D funding to PlusAI. And it's saying that this is evidence that PlusAI was already executing capital strategy to bridge a capital gap between today and commercial launch in 2027, because it already knew or had a sense that its SPAC potential was on the diminishing side or about to be extinguished.
It's interesting if you want to say the term pre-planning, the signals were there around that. And I think if you look at the overall market as a whole, we had Einride announce that their SPAC is going forward. There does not seem to be a direct correlation to the overall market, as Plus's competitors, or if you want to use the term, their peers, are publicly traded and they're performing relatively well. And Einride's SPAC is going. It seems perhaps the market is choosing a different path for different companies, and perhaps that sign with Trayton was saying, okay, this is where we are ultimately going to go. We don't know. we're just purely speculating here, but I think there's a lot more to uncover of why this did occur the way it occurred. What signals did Omega uncover as it relates to how it thinks the company is going to go forward now post termination?
Yeah, I think what Omega has uncovered is that um, based upon its like current operational footprint, the non-dilutive funding already committed, as we just talked about, and its factory-built kind of commercialization model that offloads the hardware capex to its OEM partners, that the true equity capital requirement for PlusAI to achieve through a private round from existing investors or deepened OEM commitments without having the ability to access the public markets sits around $75 to $125 million. This is an Omega kind of analysis and of PlusAI. And what it's finding is that the SPAC universe, it said in its prospectus and everything of that filing that it was valued at about $302 million as of June of last year, but that the practical capital available to PlusAI out of that SPAC was always going to be substantially lower due to redemption mechanics and projected losses per share in the maximum redemption scenario. And so it was estimating that the likelihood of realistic capital delivery from the potential SPAC was probably in the $60 million range rather than $302 million range. And so all that's to say is that there's a gap that they need to fill, but that gap wasn't as large as what the SPAC value was reported a year ago. And so Omega then is informing us that it puts PlusAI's revenue around 15 million to 30 million, derived from pilot fees, R&D reimbursement agreements, software licensing for one of its platforms called Hyperfoundry, and that therefore this is like not a net zero revenue company. And so this all reinforces Omega's thesis that PlusAI's true funding requirement is substantially below the headline SPAC figure, and that it sees potential for PlusAI to fill that gap through another private round. And thus, it's not necessarily viewing PlusAI as a significantly distressed asset at this
I
point.
think what Omega's uncovering is very valuable. At this point, there's still a lot of unknowns because we do not have any filings or data to go on. What we do know is that it's very clear, and based on everything that has been publicly filed and everything that Omega has analyzed, is that PlusAI is going to have to do a fundraising round where we do not make predictions and we're not going to say where it's going to go. We're not going to make an estimate on that. We just clearly state that they do, based on the documentation, are going to have to raise, which brings us to the risks. Omega uncovered quite a few risks, and we're going to go through a few of them here. The first risk that Omega uncovered was SPAC proceeds replacement failure risk. The specific failure mode is as follows. The private bridge financing round takes longer than 6 months to close beyond October 2026 due to disagreements over valuation, and the Traton $25 million non-dilutive commitment provides insufficient to sustain operations through the delay. In this scenario, PlusAI is forced to accept a down round of 40 to 60% relative to its last private valuation, comparable to the Embark truck trajectory before its 2023 shutdown, which triggers anti-dilution provisions that further dilute existing investors and create a negative signaling spiral that makes subsequent financing progressive more difficult. That's happened before. That's a very, I would say, important risk.
Huge. And basically, it can be right. Time is of the essence, right? That there is, even though Omega is reading this as, a potentially planned path as a substitute to public funding, and that PlusAI may have been trying to get ahead of what it saw as a SPAC that may not have happened and certainly now won't happen. And so there is a period of time for PlusAI based upon some of the positive things that we just talked about that it sees from PlusAI to get a private financing round. But that time is short. 6 months is a short time. We will see. We do not know. I cannot make a prediction. I don't have any sense of who PlusAI might go to talk about this prior or next round. But I think the writing is on the wall. Even though the SPAC maybe was not, the actual capital derived from it was going to be less than the headline number in the press release from over a year ago, there still is a need for funding. But what Omega is saying is it has about 2 quarters to do this, and that there are some positive things that investors may see in it in order to get it PlusAI the financing it needs.
And what we'll do is we'll watch the market. We'll watch for a press release or an announcement of a fundraising round or any announcement for that matter of fact. And we'll also watch for a public statement from Traton, which has not been issued yet. Which brings us to the next risk here. RAF performance stagnation risk. And this is interesting. So we have the economic financing risk, and then we have the RAFT risk here. And you might ask, what is RAFT? RAFT is remote assistant free trips. Right now, PlusAI 79% remote assistance free trips rate must reach approximately 90+% to enable commercial driverless operations. If edge case failures in the Texas Triangle operating environment, weather events, construction zones, complex merge scenarios prevent RAFT improvement beyond 82 to 85%, the 2027 commercial launch timeline slips to 2028 to 2029, extending the capital requirement by 40 to 60 million and materially increasing the probability of a bear case scenario. Funding, technology, very similar to the last signal that we discussed.
Yes. And for those who don't know, the Texas Triangle is Dallas, Fort Worth, Houston, and Austin, San Antonio corridor. And this is where, for those who follow automation in trucking logistics, this is where the bulk of advanced pilots and the first commercial operations on public roadways are occurring. Aurora is the one main person that comes to mind when you think about what's going on in the Texas Triangle. But I do think, right, this is both a manageable risk, right? This risk sits squarely within PlusAI and its engineering team. And it puts pressure on them to continue to advance their technology. I don't think I'm saying anything that is necessarily on the level of Sun Tzu or any great philosopher when I say that the more the technology improves, the more likely investors are to show interest in it in this space. And so what this is saying is, yes, PlusAI has a series of things that it can go to the market and say, here are reasons why you should invest in us. But Omega is saying it also needs to do some other things to really shore up that argument. And one of them is improving its remote assistance free trip rate such that investors or potential investors could see a pathway to driverless commercial operations in that Texas Triangle by 2027. And the Texas Triangle, again, is called out because this is where autonomous trucking is the heart of autonomous trucking on public roads right now. And so it is a place where if you can say your technology and commit to your technology being ready, it can be deployed.
I've been fortunate enough, as you know, and a lot of our audience knows, to ride in autonomous trucks, Texas Triangle. Aurora has very kindly put me in their truck. Kodiak has put me in several times. Bot Auto has put me in as well. So I've been on public roads in autonomous trucks. I've been in the Permian Basin, not in a truck, but saw it, and the other one's on road. And I can tell you from my experience of riding in these trucks on public roads, on Texas freeways, these are not the easiest driving environments. There's a lot of freight that goes by. There's a lot of oddities that you see. I saw one incident where an individual was riding a bicycle on the side of the highway. If you ask me, of all the crazy edge cases that I thought I would ever see in riding in an autonomous truck, that wouldn't be one of them. So it's a very good market to haul freight. It's a very complex market, and you're right to highlight that, which brings us to Omega's take. Omega is assessing that the market, in Omega's perception, is not valuing the Traton relationship, and that potentially Traton could increase funding to get Plus over the line. That's an interesting take. We do not have any evidence or details to look at that, but that is an interesting take of what it means for the OEM relationship and how the market right now is valuing OEM relationships versus how the market is not valuing OEM relationships. We have a divergent market here, which is a very interesting take and something that we're going to have to watch.
100%. And look, I think PlusAI has the opportunity to rebound from this setback with the SPAC termination. I mean, there's no other way to look at it. I don't think Omega is saying that it's not a setback, right? When you announce that you're going to go to the public markets through a SPAC over a year ago, and it takes about 10 months for it to unwind, I think Omega is saying, yeah, that is a sign of stress, but it is not necessarily saying that this should be a signal of a larger distress market in trucking automation. And it is also being very clear that, as you mentioned, not every company is in the same situation, and that you need to really look at the details of what's going on in terms of its technology advancements, what's going on in terms of its OEM partnerships, what's going on in terms of its engineering advances. And all of that plays into a larger narrative from Omega's standpoint that says PlusAI may be given a lifeline because of these. And it doesn't necessarily say anything about what that might mean for Enride SPAC. And so it's a really nuanced take from Omega. I think we will see what happens in the next 6 months with PlusAI. I think it from our vantage point, given the history that we have in this field, we've seen folks make comebacks from dire circumstances. We've seen folks that have had to fold up shop, and only time will tell what this signal truly means for PlusAI.
Only time will tell what the signal means for PlusAI, but if you look at the autonomous trucking market as a whole, it is a very healthy market. It is a growing market. We have public data. If you look at Aurora and Kodiak, they're publicly traded, so you can go through their filings. And then if you look at the interest from shippers and carriers in this technology, it's only growing. And it's starting to see a shift towards investor interest in autonomous trucking. And I believe in the next 18 to 24 months, maybe sooner, you will see consolidation, very similar to what we're going to see in robotaxis, where you're going to have a handful of operating systems for autonomous trucks, just like you are in robotaxis. And over time, hopefully Omega uncovers those signals. And each and every week, you and I will continue to uncover the signals. And to the audience that's listening or watching, if you're interested in learning more about Omega, our proprietary algorithm that Rob and I created, please send an email to alpha@autnmy.ai. That's alpha@autnmy.ai. What Omega does for Autonomy Signals, Omega can do for your company. The future is bright. The future is autonomous. The future is Autonomy Signals. Rob, great show again, sir. Looking forward to next week.
Likewise, I'm looking forward to hearing more about your trip out to the Permian Basin and whether or not you bought yourself a pair of steel-toed boots.
Yes, I did.